This is the teacher Haris Bhatt, and you are seeing my YouTube channel Learn Accounting with Sir Haris. Today we are going to solve a question of, it's an important question, and this question has come in October-November 2001. October-November 2001, paper 3. And this is almost not the same, obviously. This is, a type of a question which has recently has come in May-June 2025, paper 3 and variant 32. So May-June, where we have an retirement and then we are going to have a admission. Though there was a balance sheet also, which is not required in this question. So we are going to solve this question, which has come in October-November 2001. October-November 2001. Paper 3. And this question basically deals with the same question which has come in right now, and where there is a retirement and partnership, retirement and admission together in one question. Retirement and admission together in one question, which has come in May-June 2025. May-June 2025, variant 32. The last question, which is very difficult, and you people are not able to solve that question properly. Right? So let's start solving this question, which has come in this particular year, in which we have a retirement and admission. You won't find this question in the previous exams. You won't find this question in Papa Cambridge. You will not be able to find these questions on the Teacher Cambridge site, right? It is not available there. So you have to solve this right away with me. At 30th September, partners capital as per balance sheet were Able 708, Baker 511, Charles 304, Dell 500. So there are 4 partners which were basically doing their partnership together. And now on 1st October, this is 30th September, on 1st October, Able is basically going for retirement. And we are going to admitting a new partner, app, into the partnership business. Obviously, he will come with the capital amount, whatever he wants to bring into the business. So Able is retiring. And on the same date, new partner is admitting with the name app. So profit loss sharing ratio between Able 3/8, Baker 2/8, Cars 1/8, and Dell 2/8. Fixture and fitting were to be revalued at 4,20,000. It is not given in the question, but I'm telling you that on 1st October 2001, Able is going to retire from the partnership business, and app is going to admit it into the partnership business as a new partner. So there is a revaluation on that date. 4,20,000 fixture and fitter will be revalued at 4,20,000. It was agreed that the profit and loss account for the year should not be revised to take the account of this revaluation, obviously, because revaluation comes in the capital accounts. Profit and loss will not be affected. Fixture and fitting cost on 30th September is 5,10,000, and accumulated depreciation to date was 3,30,000. This is 3,30,000. Okay. Goodwill was valued at 4 lakh, and goodwill account was not to be opened in the books as usual. 500 was transferred from Abel's capital account to a loan account and left in the business. Balance on his capital account was paid to Abel in cash on his retirement. So Abel is retiring partner because he's going to retire on the same date on 1st October. So his account is going to be closed with cash, and his account is going to be closed with 500 with the loan, and the remaining amount will be paid through cash or through bank, whatever you can say. And on the same date, on 1st October, app introduced 500 into the business as his capital and his share of the goodwill. And profit loss sharing ratio then became Baker 3/8, CAS 2/8, Dell 2/8, and app 1/8, because Able will not be there because Able has retired. To prepare the capital account of the old partner to give effect to Abel's retirement, and prepare the capital account of the new partnership to give effect to the admission of app partner. So you have to prepare the capital account twice, one for the retirement on the same date and one for the admission. So let's start doing this. First of all, I want to calculate the profit on revaluation, because there is a revaluation, because there is only one asset given in the question, fixture and fitting, which has revalued to 4,20,000. Cost of fixture and fitting was 5,10,000, and depreciation on that date till that date was 3,30,000. So let's calculate the net book value of fixture and fitting. 5,10,000 minus 3,30,000. So you want to know the revaluation profit actually. So the answer is going to be 1,80,000. And now the asset will become 4,10,000. 410. I'm not taking the zeros because this is not required. So 230 is going to be the revaluation profit, right? So change is going to be the 240, I think so. Let me check it. The revaluation now amount is, what amount is going to be? That is going to be 4,20,000, right? And I have written 4,10. So this is 420. So the revaluation reserve or revaluation profit can adjust. The amount of asset has been increased. Fixture and fitting debit, revaluation account credit with 240. So this is going to be the revaluation profit. Now let's prepare the capital accounts of retirement. Able ABCD. I will use ABCD rather than able bucket. Just to make my question simple, but in the paper, you will go with the total scenario. ABCD, and on the credit side, again ABCD. We have question of balance sheet also. I will tell you that has come in 2011, right? You will find the question of 2010 and 2011, in which there is a question of partnership admission and retirement, where you have to prepare the balance sheet. But that is not a combined question. That is separate questions, right? Then you can find questions of retirement and admission together in 2011. You can have that. Maybe I need to solve that question. But that question has come with profit and loss sharing arrangement. Admission and retirement both are there, but that has come with profit and loss sharing arrangement, right? So I'm going to prepare the capital accounts now for basically for the retirement on 1st October 2001. So what is the capital account first? 708, 511, 304, and 500. Let me write the broad down here. We will go for the broad down with the whole amount, with the whole figure, I'm sorry, with the whole word. 708, 511, and then there is 304, and then 500. Okay. Now I will credit the revaluation profit. Obviously, revaluation profit is going to be credited because the revaluation profit will increase the capital accounts of two. Now that revaluation profit will be transferred to the capital accounts through according to old ratio. Sir, why didn't you prepare the revaluation account? It is not needed. Why? Because there is only one revaluation of asset, which is fixture and fitting, and I can calculate it directly. 5,10,000 minus 3,30,000. 180,000 is the amount, and now it has become 4,20,000. So revaluation profit is 4,20,000, which is supposed to be divided between the old partners in old ratio: 3/8, 2/8, 1/8, and 2/8. So 4,20, 420, 420 into 3/8. Let me calculate. That will be 90, and 420 into 2/8. That is going to be 60. Then 1/8 is going to be 30. And again, 2/8 is going to be 60. Now we know that the goodwill, we have to, goodwill will not be shown in the books because it is already existing goodwill, already created goodwill, inherent goodwill. It will be credited to old partners with old ratio, and then it will be written off to the new partners in new ratio. But he wanted us to prepare the retirement, the capital accounts for the retirement separately and the capital account for the admission separately. So that's why first I will, distribute the goodwill to the old partners with the old ratio. What is the amount of goodwill? That is 400. So 400 will be distributed with the old ratio, credited in the accounts of the capital accounts, credited in the capital accounts with the old ratio: 3/8, 2/8, 1/8, and 2/8. So 400 into 3/8 is going to be, that is going to be 150. 2/8 is going to be 100. Then 50, and then 1/8, 50, and then 2/8 is going to be 100. Now the goodwill is supposed to be written off. So I will write here, right? So goodwill will be written off in other partners, not to Able in their old profit sharing ratio, but we will not do that here. Why? Because this particular part we are preparing only for the retirement purpose, right? I can prepare this question along with app. It is a possibility. But because he wanted us to prepare it in parts, the capital accounts of the old partners and then the new partners. So that's why I'm going for the retirement first, and then I will go for the preparation of the admission. But I believe that if a student is going to prepare the capital accounts together, means the app account also will be here, right here and here. That will be still fine. Doesn't matter. Now the able capital account is going to be closed with the loan, because we are going to close his capital with the amount of loan, and that is 500. So where it is written, let me show you. That is 500 was transferred to the able's capital account to a loan account and left in the business, and the remaining is going to be closed with the name cash. So I will write here cash, and let me go for the total. Total of the credit side is going to be 948 for able. For Becker, this is going to be 671. For cash, it is going to be 384. Let me calculate. And for Dell, it's quite simple. It is going to be 660. Right? So now the cash, I will come 948 minus 500 is going to be 448. So it is going to be closed with 448. The trading partner's capital account will close with the loan 500, and the remaining amount is closed with cash, which we are paying to him 448. And he is now no more a partner of the partnership business. 671. Here I will write, 384. And here I'm going to write the 660. Same will come as carried down of these accounts. 671, then 384 and 660. Okay. Right? Now I'm going to prepare the Able is no more a partner of the business. And instead of Able, we have Up, which has been introduced into the partnership business. So we are going to prepare the capital account of Up, right? And again, the remaining capital account will remain the same. That is B and C and D, because now Up has admitted as a partner. I will write here also. Able has left the business, and App has come into the business as a new partner. So let's prepare the capital account of now for these particular. I will write brought down over here. Brought down are already there. There is no brought down of App, but for Baker, we have 671. Then we have 384. Then we have 660. Okay. Right. Now let's see that what new partner has admitted, what has been changed. On 1st October, App introduced 500 into the business with as its capital and share of goodwill, and profit and loss sharing ratio then became Becker 3/8, Cash 2/8, Dell 2/8, and App 2/8. So I will write here the bank which has been introduced by App, and that will come as 500. आ जाएगा बैंक आपका. And now I'm going to solve this question. बंद कर दो. Now we are going to solve this question. Bank has been introduced with the amount of 500. So I've written 500 here. And now we are supposed to close the goodwill, which will be debited to all the partners, to the new partners actually, or to all the partners with new ratio. So what is the amount of goodwill? That was how much? 400 was the amount of goodwill. Sir, we didn't credit goodwill. Oh, we have already credited goodwill over here. It has been credited over here in the old partners, and now it is going to be written off in new partners with new ratio. Right? I told you that we can go for a combined capital accounts of all A, B, C, D, and E. But because the examiner has asked us to prepare it separately, I'm doing that. But doesn't bother to you at all. You can do it together. Right? Because this 671, 384, and 660, they will not change. They will change only with the amount of goodwill. So now the goodwill will be written off in new partners in new ratio, which is going to be 3/8. Here it is. 3/8, 2/8, 2/8, and 1/8. So 150. We can easily do that. It comes 150. then 100, then 100, and then 150. So we are done with that. Oh, 50, I'm sorry. That's that is going to be. So app is basically with, we will debit the app with 150, then 100, 100, and 150 because the goodwill distributed between is Baker 3 by 8, Chess 2 by 8, Dell 2 by 8, and app 2 by 8. I think I have gone it little wrong, right? So the Baker is going to be uh, Baker is going to be 150. Let me rub it. Just two correct amounts because Baker is 350. Baker is going to be 150. 400. Let me calculate it for you just a minute. 400 into 3 divided by 8. That is 150. Okay. So now what we are going to do that, okay. So Baker is going to be 150, Baker 150, and Chaz 2 by 8, that will be 100. That is also 100. And app is 1 by 8. So app will be debited by 50 here. Because the new ratio of app, according to the goodwill, if you just see, it is 1 by 8. 3 by 8, 150, 400. Debit kar diya. Chaz 2 by 8, 2 by 8, 50, 100, 100, and app 1 by 8. So that is going to be 50. Now I'm going to close the capital accounts and we are done with the question. So I will write carry it down here and the question will be solved. But I told you already that you can write, you can prepare the capital accounts together. That's not a big deal. So that is 521 carried down. That is going to be 284 after subtracting the goodwill amount. And that is going to be, no, I'm not writing it correctly. That is going to be 450 for, let's go for the total. Let me write the totals also. So total will be here 500, here 671, 384. Question is almost done. You know that question is done. Just I'm going for the little calculation because we have debited the goodwill. That's it. Now we just need to know the closing balances. That is 384 and the last is 660. So here comes the balance which is 450. For Baker, it is going to be 521. This is going to be 284 and this is going to be 560. And the total will remain the same. Again, 500, 671, then 384 and 660. So we are done with the question. You can write the brought down obviously because that is how we used to do the solve the questions because brought down had marks. It is always good to write the brought down if you want to, like 450 and 521, 284 and 560. Okay. Now we can prepare the balance sheet also if need be, if given.